Welcome to this week's Forex forecast for the week ending June 16th, 2023. My name is Justin Bennett with Daily Price Action, and in today's forecast, we're going to talk about the DXY, the euro, the pound, the dollar versus the Canadian dollar, and also the New Zealand dollar versus the US dollar. Now, if you've not signed up with my partner Prime XBT, be sure to do so here on YouTube. Click on the link in the description, or if you're on the website, click on the broker's link, and you will see the access link there on that page. You can trade Forex, commodities, crypto, and indices with up to 100x leverage, and also get up to a $7,000 bonus on your deposit. So again, see the link here in the description on YouTube or on the website. Click on that broker's link. Okay, starting here with the DXY, the US dollar index, we are still seeing this market range between this area around 100.8 and also 105.60. So for the last few months, really all of 2023, we have seen the DXY, the US dollar index here, just range between these two levels. Okay, so we saw a lot of chop back here in April, but as you guys know, I was staying cautiously bullish, and sure enough, we got a nice rally. Now, for last week, we did see the DXY close Thursday below 103.50, which the yearly open for the DXY is 103.49. Okay, so that's going to be potentially significant going into next week. You can see these lows through here. We've got this high, and also these highs and these lows. Okay, so Thursday closed below. I was waiting to see if Friday would reclaim this level or not, and so far it is too close to call. Because even though the yearly open is 103.49, if you look here on the daily time frame, you could make the case that this key level is up here around 103.52, as high as 103.55, which is exactly where the DXY closed on Friday. Okay, so situations like this, what I like to do is wait for Monday's close, because Monday is going to tell us whether the DXY is going to close somewhere up here or down here. Okay, if it closes down here, that tells us that this was a breakdown. Okay, and Friday did not reclaim that level. And we're also then looking at 103 and potentially down here toward, the 102.20 area in the coming days. Now, alternatively, if we see Monday close up here, okay, anywhere up here in this area, then it tells us that Friday was a reclaim and this down here is a fake out, in which case we are probably looking at a higher dollar. Okay, so it's going to take the first 24 hours of next week to decide. Do keep in mind too, if you look here at the 4-hour time frame. So I mentioned this last week on the blog, but you can see where we have what could be a bullish flag pattern forming here off of this rally. Okay, so we had the rally up from the DXY. So you can see very aggressive rally back here, right? We then had consolidation, which right now is forming, as I said, a potential bull flag pattern. Now, the confirmation of this is going to be a close above this level up here. All right, do that, we're looking at 104.30, potentially 105 and higher. All right, but we could still see, like I said, a move down here into the support area. If Monday does close below that 103.50 area, keep in mind too that we do have a lot of event risk next week, including CPI on Tuesday and FOMC on Wednesday. So next up we have the euro, which is essentially the inverse of the DXY. And you can see where we have this key level right here at 107.60. All right, so I've talked about this a lot here on the website, and you can see where this level has served as a pivot for several months, and it was also support back here, resistance on these two candles, and Thursday closed above it. Now, the interesting part here is that Friday closed well below that level, okay, and there's really only one place to draw this level. So unlike the DXY, we can kind of say that the euro looks like it gave us a fake out, okay, because I mentioned last week on the blog, I said that if the market closed the day back below 107.60, then this would look more like a fake out, right? Where Thursday's close closed above 107.60 and Friday closed right back below. Okay, so this level at 107.60 is going to become resistance for the week ahead and open up this range once again, okay, with the range floor being down here around 106.70. So this is kind of an interesting view when we talk about the dollar, because again, this is essentially the inverse of the DXY. So this is a bit more convincing in the sense that the euro does look pretty weak with Friday's close, whereas the DXY really needs more time to determine which way it's going to go. Now, the one thing I will say about this, though, is it was a Friday close, which you have to be a little bit careful of because of the low volume going into the weekend. And once again, we do have a ton of event risk this week, including CPI, PPI, FOMC, and a bunch of others. Okay, so that's all going to affect the euro, so you've got to be careful with this one. But as of right now, 107.60 looks like it's going to be resistance. Obviously, if Monday were to close above it, then we have to reconsider that. But as of right now, I'm going to treat this level here as resistance and range support down here at 106.70. So next up for the pound, I've been talking about this one recently and the potential head and shoulders that had formed. However, the key for this market was to close below the neckline, which we never got. It never even got close to that. So you can see that off of these lows back here, this was our neckline all the way down here at 123, which it never got close to. So that pattern never set up. And instead, what I'm looking at now is the potential for a rising wedge forming off of the August high from back here and also that October low. So you can see this trend line here, we've got a few touches, including the last couple of weeks. You can see where the pound found support down here on several occasions. Okay, so this is going to be support down here along with that 125.40 level. All right, so notice where Thursday closed. Okay, it closed above these recent highs. So you can see that the highs right through here. Also these highs, we got the close above on Thursday, held above it on Friday. Okay, so the only way this turns into a short is if we get a close back below 125.40. If the market were to do this next week, close below this, then this up here becomes a fake out and we're looking at a move back there toward that trend line. Okay, so that would be a short right there. However, we've got to respect the breakout while it holds above 125.40. And as long as it does that, we're looking at potentially 126.60 and also that trend line up here around 127.30 to 127.50. Okay, so right now the market is holding above that support level. We have to respect that. If the dollar were to rally though and we get this, then that could be a short opportunity. So next up, I want to talk about the dollar versus the Canadian dollar. And I've also talked about this one a lot on the blog. Okay, and the thing here is that the market is so far holding above this trend line that I've talked about. We've also got this trend line off of the March 2020 high. So that's the COVID high. We've got the trend line off of that high. You can see that we could draw it with this swing high back here. All right, so we got the swing high, resistance right here on this candle. Okay, now support, we have a ton of touches off of this trend line down here. Okay, so this is the key level for the dollar CAD, and Friday dipped below it. Okay, Thursday bounced from it, Friday dipped below, and so far the market is holding. So if we move in here on the daily time frame, you can see that this is our key level where Friday dipped below it. All right, so on Friday's session, we got the wick down here, right, to take out some stops, and the market closed back above that level. Now, if we look at the hourly time frame, okay, here's what I'm watching this week as we head into all of that event risk. If we look here at the hourly, you can see where we've got a very clear horizontal level at 134.50. Okay, so all of these highs back here, this is going to be resistance, key resistance for the dollar CAD this week. Okay, now if we look here over the past week or so, we do have a falling wedge. Okay, now typically patterns like this signal a bottom for the market. Now the key for this though is going to be to get a close above this wedge resistance right up here. You can see where Friday tried but failed. This level is going to be critical this week. Okay, if we do get a sustained break above this, right, some basing up here in this area, then that could trigger a move back here towards some of these highs and potentially 134.50. And really, if we look at the higher time frames, okay, that could also trigger a bounce from that trend line that we talked about. All right, down here, you can see it's even holding on the 4-hour time frame, you know, back here toward 134.50 and potentially even that area around 136.50, which this is our range for the dollar CAD. Okay, range lows down here and range highs up in this area. And this right here is essentially the mid-range, pretty close to the mid-range. So really a breakout from here could take us up here toward 134.50. You know, break above that, we're looking at 136.50. But if we see the dollar CAD close a day below that trend line that we talked about, okay, that significant trend line down here around 133.30, then that could be bearish for this market. Okay, close a day below this, and I think that we are looking at a lower dollar CAD unless it becomes a fake out. Okay, but that's the level to watch down here, 133.30. Alternatively, as I said, on the hourly time frame, if we do get a close above this hourly trend line, okay, base above that, we could be looking at a run back here toward 134.50. All right, so last up we have the New Zealand dollar, which the last time I talked about this, we were looking at this trend line off of these November lows. Okay, so November lows back here, you can see swing low, and resistance here on Friday. Okay, now the market came very, very close to taking that out. But if you'll notice, okay, on the daily time frame, the New Zealand dollar closed right at that level. All right, so once again, like a lot of these charts, it is too close to call. As of now, I have to assume that this is still going to be resistance. Now, that doesn't mean I'm going to go short this market because there's no clear signal to short. We could get a move up here on Monday into this area. Okay, so I don't want to short this without some kind of signal that the market is likely to return down here toward the range lows. So what I will watch for is a potential move up here on Monday into this area through here, followed by a close right back below for a bearish pin bar. If we were to get that, then yeah, I think we're probably headed back here toward the range lows. All right, and the way that could look if you look at the 4-hour time frame is something like this, where we've got this higher high on the 4-hour time frame. And again, you can see where the market closed right at that November trend line. Okay, so if we look at something like this for the New Zealand dollar, all right, so off of these lows, you extend this up off of this high, this area here early next week could be significant. Okay, so this is going to be the one to watch, where if we get a move up on Monday, retest this area, close back below, then that could set up to be a short opportunity. But if the New Zealand dollar closes up here and starts to base above this, okay, it's going to be a reclaim of that November trend line, in which case this entire move, okay, on the daily time frame below that November trend line potentially becomes a fake out. Okay, if we get the market reclaiming this level up here next week on the higher time frames, right up in this area, then all of a sudden this becomes a potential fake out and we could see a higher New Zealand dollar. All right, so keep that in mind as well, that really it's going to come down to the 61.30 level. Stay below this on the higher time frames and we are still in this range here. Alternatively, get above this and we're looking at levels like 61.80 and potentially higher. All right, so that's it for today's video, guys. Still a lot of indecision out there from these markets, and really with where the dollar closed on Friday, like I mentioned, the DXY is really kind of indecisive right now, right? We don't have clear direction as far as did it reclaim that 103.50 area, or is it still holding as resistance? Furthermore, we have a lot of event risk this week. So really, I think it's going to take the first 24, maybe even 48 hours to really see where these markets are going to go over the next few weeks. But there's also no rush to get in, because if this does turn into a bull flag, then we could be looking at a move up there toward those 105.60 range highs. Okay, so plenty of room between a breakout here and those 105.60 range highs. So even if you miss everything between this area, that's okay, because there's a ton of room up here to take advantage of if we do get that move. Okay, so just, stay safe out there this week with the volatility because of those events. And I'll talk to you guys on Monday on the website. Have a great rest of the weekend. Trade well out there next week. Take care.